Well, greetings and salutations, test takers. This is Dean Tinney, also known as the Series 7 Guru. We do a weekly drawing every Tuesday at the close of that live stream Q&A, and the winner gets to choose what they would like to do in a 30-minute coaching call. Nico's choice was to do 20 practice questions. Difficult. He chose difficult, but, the sword is the sword, as I was telling him. So who knows what kind of draw we're going to get. I highly recommend we're using the Kaplan Q Bank here. And if you don't have a Kaplan Q Bank, I highly recommend it as a paid supplement with my Guru 15 discount code at checkout. Comes in at $58.50. The thing I think that makes it very competitive is the idea that we can actually create our quizzes. So here we're going to go to the areas we know are the most testable. There are 4 functions on the test. Function 1 is, can you find a customer? Function 2 is, can you open an account? Function 3 is making investments. That's 91 questions. Of those 91 questions, there's about 20 on munis. So I'm going to check munis here. There's about 20 on mutual funds. So I'm going to check mutual funds. And there's about 20 on options. So that'll be our mix on these 20 practice questions. Now we go back here to the number of questions. We'll choose 20. And we will show answer explanations. We won't do that. And we will launch our quiz. Boom. Our first one out of the gate is a Muni question. It says, under MSRB rules regarding municipal securities, a control relationship exists when? All right, so Nico, you give it your shot, and then I will explicate, tell you whether your thinking is stinking thinking or thinking that works, and will work and result in the right answers for you all the time. All right, let's go through our choices here. Officers or employees of a broker-dealer hold positions of authority over the municipal issuer. What I recommend that you do, if you don't have, our time together is always a buffet for those of you who are watching. And what I suggest that you might want to consider doing is putting T's or F's next to each of the statements.
Yeah.
Even if you can't put a T or an F each to next to them, it can help you get a better choice. So what say you? Are officers or employees of our broker-dealer who hold position of authority over the municipal issuer? Now, don't you love this? In plain English, that means like our CEO sits on the city council.
Yeah.
True or false?
Yeah. True.
You're correct. So now we know we need Roman numeral 1, which is helpful.
And then,
official of the municipal issuer holding policy-making positions at the broker-dealer.
True.
There you go. And that looks like we are done.
Yep.
So that's a correct answer there. Let's put that in our answer box. Oof. I would know the MSRB rulemaking board has A rules, administrative rules, D rules, definitional rules, and G rules, general rules. Of the D rules, the definitional rules I'd be aware of is what's called under the MSRB a nominal quote, a quote for informational purposes only. I would know under general rules of the MSRB that we must disclose on the confirmation any muni bond at a premium yield to call. And I would know Rule G37, which says we can't give more than $250 in campaign contributions to a municipal officer. One more, G20.
Yeah.
G20 is the gift or gratuity rule. It's the exact same as FINRA's rules that says an employee of one member firm can't give an employee of another member firm more than $100. And again, it doesn't count normal deductible business activities, doesn't count reminder advertising. All right, on to question 2. The exchange privilege offered by an open-end investment company allows investors to...
So I'm going to go with A is false.
You are correct.
And exchange shares of one open and another. I'm going to go D is the right answer.
You are correct, Nico. You're definitely correct. By the way, is that a taxable event?
Yes.
Right on. Purchase of new shares from the dividends, that's very testable. And that would be called a DRIP. a dividend reinvestment program. This is where I tell the mutual fund that I don't need the money, so just go ahead and buy me more fund shares. And again, as far as the IRS is concerned, that's the same as getting the money. So that too would be taxable, but that isn't what this question is about. But I would, as a test taker, know about DRIPs.
Okay.
And, where you I want to reinvest the dividends in capital gains. All right, you're 2 for 2. Woohoo!
Go.
A municipal revenue bond contains a net revenue pledge. This is what I call legacy questions. Questions like this just drive me nuts, whether it's Kaplan or Past Perfect or STC. These kind of outrageous questions used to be asked. They're no longer showing up on the actual exam any longer.
Mm-hmm.
So what you should know is a net revenue pledge would be found in the trust indenture.
Yeah.
And what you should know is the operation and maintenance fund has priority. That is very testable.
Yeah.
But now they're asking us to actually calculate the debt service coverage ratio. I haven't had anybody in years tell me they've had to do this. You should know the debt service coverage ratio is associated with municipal revenue bond.
Yep.
So we have 30 million of gross revenues, and we have $18 million of operating expenses, right? So when we take the 30 million minus the 18 million, we have net revenue, revenue pledge of 12 million.
And then we have to divide that by
by the 4 and the 2, and so we get 2 to 1.
Yeah.
Boom. Excellent. Municipal bond is purchased at a discount in the secondary market at 90. The face amount is $10,000, and the bond has 10 years to maturity. If the bond is sold for 97 after 5 years, what is the taxable gain? So first comment I'll make is the only component of a muni bond that is tax-free is the coupon.
Yep.
Anything other than that is going to be taxable. All right. So how do you think we should proceed on this one?
So this would be accretion upward.
Right on. Straight line amortization upward. You're right on the right track. You're going to do accretion. We're buying for 90. We assume may not be true that we're going to hold it to maturity, right? And you're going to get taxed at ordinary income. So our cost base is going to be here. If the bond is sold for 97, we got to figure out how much we should have accreted already.
Yeah. So I would do 1,000 minus 900.
Well, so right on. So 1,900, that's 100. You're on the right track. So now what are we going to do with 100?
Divide that by 10.
Right on. So that's $10. You're nailing it.
And then multiply that by 5.
That's right. So now you have what's called the adjusted cost base. You are correct. The adjusted cost base is 95 or 950.
Mm-hmm.
And so now you sold it for 97 or 9,700. By the way, the odd thing of this question is 10 grand. It doesn't have anything to do with it getting the right answer.
Yeah.
So, the face amount has nothing to do with answering this. That's just a quirk they're putting it. So we bought it for 9,500, or excuse me, 9,000. That's the 90% of the 10. We sold it for 9,700. And so we made
200.
Excellent. I think it's more likely you're going to have to do straight line amortization downward.
Yeah, for a premium.
It's more testable to get a muni bond purchased at a premium. And then that $200, remember, is taxable at ordinary income because the only component that's tax-free is that coupon. Well, I think we said, give us some options, give us some munis, give us some mutual funds. But so far, one mutual fund and the draw is giving us lots of munis. Yeah. The computation for accrued interest on corporate and municipal debt obligations is based on?
That's C.
You are absolutely correct. You should definitely be able to compare and contrast muni bonds and corporate bonds with government bonds. Mm-hmm. What you need to know is how are government bonds goofy as compared to corporate and muni bonds? Mm-hmm. How are they goofy? That's the way I can think of. They're goofy.
Yeah.
Now, corporates and munis use 30-day months, 360-day years. You're correct. They settle T plus 2, right? And they trade in eighths. Yeah. Whereas treasury notes and treasury bonds are goofy. They use an actual calendar. They settle T+1, and they trade in.
30 seconds.
Excellent, excellent, excellent. By the way, a lot of us colloquial, Nico, refer to the Series 7 as the stockbroker's exam.
Yeah.
If there were truth in labeling, we'd really call it the bond broker's exam,
Yeah.
because there's way more questions on bonds than there are stocks. Every once in a while I get somebody go, hey, God, I've been trading stocks for 20 years and I'm going to ace this Series 7. I go, I'm not so sure about that. There's not as many stock questions, equity questions as there are bonds. All the following must register as an investment company under the Investment Company Act of 1940, except if you and I wanted to start our own mutual fund. I don't know why we would, Nico, but surprisingly, we only need $100,000 to start our own mutual fund, and we only need 100 shareholders.
Yeah.
When I'm teaching class, sometimes, I sometimes will have a class of 100 people. I say, listen, let's all put up at $1,000 and start a mutual fund.
Yeah.
There are more mutual funds than there are Taco Bells. There's actually more mutual funds than stocks to put in them. But the three types are face amount certificate companies, management investment companies, open and closed, and unit investment trusts.
Yeah.
And the vast majority of questions are going to be on open and closed. So here we're trying to figure out which one is not a mutual fund, doesn't fit one of those definitions.
I'm going to go with A here because of the
You are correct. You are correct indeed. And on the Investment Company Act of 1940, how often? So, we start the Nico and Dean Fund.
Mm-hmm.
How often are we going to calculate our NAV?
Isn't it daily?
Yeah, once per business day, right on.
Yeah.
And if somebody comes into our fund or out of our fund, we're always going to be doing business with them based on the next calculation of the NAV.
Yeah.
Forward pricing. Hey, Nico, do we want to offer different share classes on our mutual fund?
Yeah.
You do? Oh, man, what a pain in the ass.
Well, like,
well, we can. I mean, we can offer A
exactly.
shares and B shares and C shares. And, our first disagreement on the fund management, I'm going to say, why don't we just stick to the old fashioned A share, man?
Yeah. Because
Where
that's
we
the
get people
most
at break point and we get them 11/10s, because we only want to do business with people with large amounts of money and long-term time horizon.
Yeah.
Right? We have nothing against poor people. We just don't want to talk to them. I'm joking. That's a joke. Right? And you said you want to do B shares. Okay. So if we're going to do B shares, it's going to have a contingent deferred sales charge. And that'd be for customers that have lower amounts of money and have a long-term horizon. And you said you might want to do some C shares where we have a promotional expense that never goes bye-bye, which means it would be for somebody who has a shorter time horizon. Yeah. Right? And then the 12B1 fee is a promotional expense. I would certainly know that. Oh, finally, woohoo! We finally get an option question. An investor purchased an XYZ October 50 put for a premium of 4. Now, you got to be careful about how many voices you're going to have in your head and your brain housing group as you're doing options. What I always recommend, particularly on puts, I always like to look at that and say, what am I looking at? I'm looking at a choice to sell the stock.
Yeah.
At the strike price. Because particularly on those puts, every once in a while it goes away. I don't get it, Dean. I buy it to sell it. And I say, well, those are different things. When you buy a put contract, you are establishing a choice to sell the stock. Choices cost money. So that's what I like to do before I do anything, is just kind of get clear about what I'm looking at. Okay, so the other thing I like to do is say, okay, so I did an opening purchase of 4. Right. So I like to get T fired up and track the money in and out of the account. So
yeah,
I'm going to make my T, boom. If you get good at contract specifications, in other words, you're not fumbling around that's a choice to sell the stock at the strike price.
Yeah.
And you can track money, you're going to be in pretty damn good shape. You're going to be say, hey, give me all kinds of option questions. Now, I like to use dollars out.
Yeah.
Dollars in. Some people like to use debit. Some people like to use minus signs, whatever floats your boat.
Yeah.
And I don't like to put, all the zeros in there because I think that can mess me up.
Yeah.
So I call this the initial setup. And so is that 4 going to be money out or money in?
That's money out.
Right on. I would also know, very testable, that is called an opening purchase.
Yep.
because opening purchases are how we establish long positions. So that's an opening purchase. And the reason that's important is because we want to know that the way we get out of an opening purchase is with what's called a closing sale. And so that's going to be important for us as well. So we're going to go boom. And we're going to go boom. And here, that would be a closing sale. I call all this work that we're doing here on the board to be the setup. The setup. And then, once we do the setup, then we're ready to move on. Now, some people like to use credit. I like to use dollars in. I like to use, some people like credit, some people like plus, whatever floats your boat. Yeah. Okay, so it says on expiration date, the stock is at 42. So there's only three things that can happen to this contract that we just purchased, Nico. It can be traded, it can be exercised, or it can expire.
Yeah.
Right. And so here it says the investor closes the position for intrinsic value. So what I like to do when I get this question like this about intrinsic value is I like to put the intrinsic value either above or below my strike, just to make my analysis a little more straightforward. And remember, we have the mnemonic call up, put down. So the market price here is down from the strike price.
Yeah.
So I'm going to put that there. And I'll make that a little bigger. Boom. And so does a 50 put with the stock at 42 have intrinsic value?
Yeah.
It certainly does, right? So now we can plug in. Now, in the real world, just for your own edification, in the real world, that would actually have some time value as well. But, the phraseology of the class is, the test is they always like to say, close out for intrinsic value.
Yeah.
Wow. Nico, we are big time winners. We have doubled our money, my friend.
Yeah.
Now, that doesn't usually happen, but the reason we doubled our money is because we were right about all three things. We said the stock was going down. We were bearish. We said it was going at least down by 4 points. Our break even was 46. And it didn't go down 4 points. It went down 8 points. So we're a big time winner. Now, the problem is when we win, we have to pay our taxes, right?
Yeah.
Yeah, I was at the roulette table Friday night, and I probably shouldn't be saying this in video form, but I was a big winner. I'm not so sure I'm supposed to report my winnings. I, Nico, when I'm a winner, I take the chips. I don't cash them in. My friend makes fun of me, and I give them to mom.
Yeah.
So, she can go there, have brunch with her friends. Anyways, exactly. When I came in Friday night and I give her the chips, she was kind of being a little cavalier with them. I said, well, Mom, count the chips.
Yeah, I usually go odd and first 32.
Yeah, and then she was funny. She said, I've never seen $500 chips before. I go,
there you go. Yeah, exactly.
All right. So we didn't broken even. I don't know what the hell broken even is. Yeah. But no, 46 would have been our break even. We have a $400 short-term capital gain. Yeah, there we go.
That's the answer.
Now, just be careful. That short-term capital gain is going to be taxed at ordinary income tax rates, and sometimes people get hung up on that.
Yeah.
So don't tell me it's a different thing. How's it taxed at your ordinary income tax? But it's a $400 short-term capital gain.
Yeah, but then I think that and variable annuities are ordinary income.
Right on. And I get a lot of people who taxation option. To be honest, this isn't really a taxation question option. It's really, can you just figure out the profit or loss on this thing, right? So sometimes I think people freak out unnecessarily before they actually kind of say, oh, this isn't so bad. Oh, well, we just talked about this. Investing in mutual fund Class A shares will result in a customer paying a sales charge that is imposed at the time of the purchase. We call that a front-end load. There we go. Now they tell us that. That's why it's called front-end load. Well, thank you very much. With Class A shares, the investor might be entitled to breakpoints, quantity discounts, resulting in a customer paying a reduced sales charge based on a breakpoint schedule found in the prospectus. Which of the following can be used are combined for breakpoints. This is called a combination privilege.
I'm gonna go with D.
Yeah, your D is in dog.
Yeah,
Yeah, the married couple, right?
yeah,
The married couple can certainly do that. If you don't have enough to meet the breakpoint today, Nico, is there a way to get the reduced sales charge even though you can't meet that breakpoint?
yeah. The like the letter, the rights of
You're
accumulation.
correct. The
And,
letter of intent, right on.
yeah,
And how good is that letter of intent? If you do sign that letter of intent, how long do you have to fulfill it?
90 days.
No, 13
Oh,
months.
13 months. Yeah, and okay.
Now, listen, the game we're playing, I'm asking you to pick things out of the stratosphere. What you gave me is the answer to a different question. How
Yeah,
long can it be backdated? 90
90
days.
days. Yeah,
And that
yeah,
will be inclusive of the 13 months.
yeah.
Can you be hurt by filling out that letter of intent?
No,
Yeah, I mean, there's no way you're going to be in a worse position. So why not fill it out, right?
yeah,
I say, Nico, if you do it, we're just going to escrow the extra shares you're going to get. And if you don't fulfill it, we'll backflag the account. It'll look exactly like it should have looked. Now, what if you could make the break point, but I recommend you invest just under the break point?
you would be violating due to
Yeah, yeah. So just be careful. You're absolutely right. That's a violation of the code of conduct called a break point sale. The code of conduct is the ethical behavior that broker dealers and associated persons owe customers. And so you got to be careful. Break points are good. Break point sales are bad. Right. So again, the easiest way to stay out of trouble is tell people how to get it right. I wish other businesses were like ours. Sometimes I'll ask them, listen, is there any deal I don't know about?
Yeah,
They go, what do you mean? I go, well, my business, I got to tell people how to get the best deal. Is there something I'm missing? What was I buying the other day? I know some combo meal or something, and I forget how I was ordering it. And then the person, I appreciate it. The guy said, "Hey, no, Dean, that's not the way you do it. If you buy it this way, it's like a buck cheaper." And I'm like, part of me wants to say I'm blessed enough it doesn't matter, but
yeah.
I said, well, thank you so much. Which of the following statements best describes a breakpoint sale? Well, we were just talking about this as a big
Hey,
note.
yeah, hey,
Yeah, I always joke it's not cool if you pass your Series 7, right? And you come back and tell your manager, I want to do some breakpoint sales, some
yeah,
churning, some front running. I want to open some fictitious accounts, trade on some material non-public information. I was teaching a class, this guy's name was Steven, and every time we went over a rule, he'd say, how do we get around that? I said, well, you're not supposed to get around that. And he goes, well, how do you get around that? I go, you're not supposed to. One time he said something. I said, Stephen, how would you even know that?
yeah,
Well, Dean, sometimes you do what you got to do. And I said, boy, that is not a good answer to a compliance officer. All right. So county taxes, this is another one of those what I call legacy questions. You should definitely know that GO bonds are backed by the full faith and credit, and that local government is financed through property taxes.
yeah,
But I haven't had anybody again in years tell me that they actually had to calculate mill rates on the property.
yeah.
The
But
county taxes, real property is a millage rate of 15. And what that's going to be in dollars is 0.015.
yeah,
And then we just times it. It says 80% of the current market value. This is testable. It's not the current market value, it's the assessed valuation.
yeah,
And so now they tell us that it's 80% of 150. And so again, you won't have to do this on the test, but we would just take 150,000 times. By the way, no, this drives me nuts, but no test prep vendor, whether it's Kaplan or STC or Past Perfect, ever wants to take questions out of their Q bank, even though they know nobody's seen them in years, because nobody wants to say they have a smaller Q bank, right? It's even me on my channel. I've got practice exams, and some have been up there 3 years. They're still current, but people say, "Hey, why don't you take that one down?" I go, "Oh, because then I got one less practice exam."
yeah.
Yeah, I don't want to do it, right? So if I times that by 80%,
Hmm.
that's 120, and then I times that by 0.015, and I find out that is,
D.
yeah, right on. That's going to be $1,800. An account initially approved for covered call writing must be reapproved for which of the following? I like this. So, to get approved for options, remember, I'm going to give you the options disclosure document, very testable, Nico. I say, I want you to read this. There's no way that you can read this disclosure document while I wait. I mean, it's 100 plus pages,
Yeah,
all the bad things that can happen to you, the characteristics and risks of options. I joked, Nico, at the casino Friday, I was kind of surprised that there is no qualification there. You just can come in and At my roulette table, there were people spending money. It's not my business, but I thought, can you afford to lose that kind of money?
Yeah.
Maybe we should call the registered gambling principal
Disclosure
and see,
document.
whether you can do it. Now, in our business, it's pretty easy to qualify you if you want to buy an option because, worst case, you're just going to lose your money. And I'm simply going to say, is this the kind of money you can afford to lose?
Yeah.
And then I'm going to go back and get my ROP to approve your account. And then very testable, within 15 days, I need back from you the option agreement that you read that document and you understood it. 15 days from the account approval. If you're late, I'm only going to let you get rid of the stuff you got. So now you want to do some more. So you say, hey, Dean, this cover call thing is kind of cool, but let's do some other stuff. Let's do some ratio writing. Let's do some spreads. Let's write naked calls. I go, Nico, please don't. That's just stupid.
Yeah.
But hey, you want to do these crazy things? What are we going to have to do?
For all four of them.
Absolutely. You're correct, right? Anytime we got to change it, we got to go back and get you approved. When a registered rep recommends a municipal bond purchase to the customer, which of the following is of least consideration in making the recommendation? Suitability is, I think, some of the toughest questions because they're judgment questions. And so now we got to I don't know. One thing I probably would try and do on this one is process of elimination.
Yeah. So, B and C you could take out.
Right on. You're exactly right, because that's going to be huge, right?
Yeah.
In terms of suitability, you're absolutely right. So B and C, I need to know your tax bracket because I might have to either crunch taxable equivalent yield or taxable equivalent yield based on that. Definitely need that. Need to make sure I don't buy you a bond that your state will tax you on, right? Because reciprocity only applies state to federal government. So, if you live in Nevada and I sell you, or you live in California, I sell you a Nevada bond, California can tax you. So you're absolutely right. So B and C, and now what you got to choose between is the bond's credit quality,
Yeah.
or what we're going to do with the money that we're raising from this muni bond.
And then I'm going to go with A as the least.
We got you on this one.
Oh, well,
Because the
yeah.
bond's rating is really important, right? Because of credit risk.
Yeah. Yeah, exactly.
Right. Exactly. So is this triple B? Is it investment grade? Is it less than investment grade? There are two major risks in bonds: there's credit risk and interest rate risk. So we got you on that one.
No, yeah, yeah.
It would be the intended use of the funds, right?
Yeah.
So, customer buys 5 municipal bonds maturing in 20 years for 104. Now, you nailed this last time.
Mm-hmm.
So this is a muni bond purchased at a premium, and so you don't get to decide how to realize this loss. Because what you'd like to do is realize the loss whenever it's convenient for you. The IRS says, no, 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 no. You got to do straight line amortization downward. I call that, it's called decretion, not testable. No, it's called decretion, but accretion is up, decretion is down. So what you going to do, my friend? You nailed it last time. So what are you going to do this time?
I would do 1040 minus 1,000.
Right on.
I'll get 40.
That's right.
I'll divide that by 20.
Right on.
And then I'll multiply that by 10.
You're absolutely correct. And when you do all of what you did,
And then
I just got to remember there's 5 of them, right?
Yeah. And then I'll do the 1040 minus the 20.
Uh-huh.
And then, yeah, so that'd be
everything you said is correct. So
that'd be a 100 or so 1020.
So let's just go through what you said. Now listen, we're in a coaching call here of 30 minutes. On the test, you have plenty of time. Everything you have said has been correct. As your, coach, I would say, maybe on your scratch paper, just write down what you said so that you can look at your numbers. So you were correct. You told me, Dean, I'm taking 1,040. I'm going to get back 1,000, assuming I hold it to maturity, which is the first step. So I'm going to take 40 divided by 20. You were correct. You said that's going to be 2. And then you said I'm going to adjust it for the 10 years I've had it. 10 times, we're doing it per bond. 2 times 10 is 20. So 1,020 is your adjusted cost base. That's what you told me. You're correct. And then we sold it for 1,030. So we made $10.
Yep. And then since you have 5 of them, it'd be a $50.
Yeah, you nailed it completely. So just, there towards the end when you were fumbling around a little bit, it was just because You have
Exactly.
done the math. And, when you do the math, like I say, the only thing I would recommend is when you do the math, just, on your scratch paper, just make a note of, math so you don't, when you get to the end,
Yeah.
forget what the math you did. But everything you said was absolutely correct. So very good. Both these you've nailed. So I'm very excellent. On debrief, I get Nico, people telling me about half the time they had to do decretion.
Mhm.
50% of the time they told me they saw it, 50% of the time they tell me don't. A mutual fund's unrealized loss will result in which of the following? So,
So it'd
not
be
bueno that we got a loss on some stock.
number one for sure.
Right
So
on. You are absolutely right. That's the biggest takeaway is what makes the NAV go up or down is the value of the security. So you are absolutely correct. So it's either going to be A or B.
then I'll go with B.
B is 1 and 3, and you are correct. You are correct. Excellent. That was a judgment question. I thought that one was pretty tough. I didn't think that Roman numeral 1 was tough, but
Yeah.
the other part of it was pretty tough. An investor redeems 200 shares of ABC, which has no redemption fee. If the quote is 1205 on the bid, 1301 on the ask,
Yeah.
what amount will the investor receive? One question that sometimes shows up is NAV is to bid as public offering prices to ask. So sometimes we use those terms interchangeably with those terms. Now, the only thing we got to be careful about is this a closed-end fund? There is nothing here that tells me it's a closed-end fund. So we're simply going to take, again, the other way I think of this is when customers buy things, they always pay the high price. They always receive the low price. So if you're redeeming, you're going to get 1205, right?
Yeah. Yeah. So
1205 times,
the 200.
boom,
Yeah.
practical application.
So because the bid is the NAV and then the
That's right.
1301 is the
Yeah,
offer.
these
But
are
when you redeem
synonymous
it,
terms.
yeah,
These are
okay.
synonymous
Yeah. So
terms,
when you
right?
redeem
So
it, yeah, yeah,
yeah,
okay.
we could even, put NAV here, and we could put public offering price here. If I asked you to, just playing around, if I asked you to calculate the percentage sales charge,
Mhm.
what
So
would be
that'd
the
be
maximum sales charge for an open-end fund?
0.85, 0.85.
Yeah, excellent. So how would you calculate the sales charge here if I asked you to do that?
Wouldn't you do 1301 minus 1205 divided
Excellent. So that would be 96 cents. You're absolutely correct. Right. And then what are you going to do with that 96 cents?
divided by 1301?
You are correct. And let's see if anybody's going to jail here. I'm joking, but if we took the 0.96 and we divide, you're correct again, 1301. That's 7.4%. So not a problem. Cool. And you're doing so well. That's why I'm kind of, increasing the question count by kind of
No, yeah, yeah, I appreciate
riffing on, how well you're doing, right? So,
I appreciate that.
which of the following holding period affects the holding period of XYC stock, a stock that has been held for 6 months? So to qualify for a long-term capital gain, you got to hold a stock for more than 12 months. And so we're not quite there yet.
So I'm gonna go with 1 and 2 as my answer.
You are correct. Buying a put. So as your broker, again, we don't get too much into the tax consequences, but I say, hey, listen, why it's been a good ride. Why don't we go ahead and protect that stock position by buying a put? I do need you to know, Nico, that's going to interrupt your holding period
Yeah. Okay.
because now you're no longer at risk, right? So, we're going to have to reset that holding period.
Mm-hmm.
Excellent. Investors who are subject to the alternative minimum tax will lose tax benefits normally associated with. This is a muni sort that we did, and I would like you to answer this, but then I'd like to comment because you need to know what type of muni bonds are considered to be this.
Isn't that private purpose?
Yeah, that's right. So it's a private purpose bond because private purpose bonds are
Yeah.
tax preference items.
Yeah.
So we wouldn't recommend to somebody who's subject to the AMT either industrial development revenue bonds or industrial development of agency bonds because they're private activity. Another one that falls into this category would be public purpose non-essential,
Mhm.
which is a stadium. Excellent. All the following are call buyers' objectives except.
I'm gonna go with D.
D is in dog.
Yeah.
You are correct. We might buy a call to be able to buy some more stock to add to our portfolio. I, for example, don't tell anybody, Nico, but I wanted to buy 1,000 shares of this $20 stock, but at the time I didn't have $20,000.
Mhm.
And I thought, geez, by the time I do get the $20,000, I mean, I'm going to have it, but I don't have it right now. I was afraid the stock would move away from me. And so I bought the 20 calls for two. So I spent $2,000 to buy the 20 calls. And that way, when I got the 20 grand, I exercised my call. So,
Mhm.
and now I had that stock position along with my other stock positions in my portfolio. I might use a delay decision to buy the stock. I say, I'm not sure if this stock is going up or down. And I go, man, if I spend the 20 grand now and it goes down, that's not going to be bueno.
Yeah.
Why don't I throw $2,000 out there and have the right to buy it for 20 and let's see what happens. And then I also go by the 20 calls just to speculate, right? When I buy options, very important to speculate.
Yeah.
I have to be right about three things. Direction, here I'd be choosing up. I got to be right about how far up. I got to cover my out-of-pocket cost,
Mhm.
break even, and I got to be right about timing.
Yeah.
That's what's tough. We remember the other time we made some money here, so that's tough. It's tough to be right about all three things there, right? So, when you are right about all three things, well, then you're a big time winner. So, I like that one. You performed well on that one as well. A customer purchases a municipal bond in the secondary market at 84 and holds the bond to maturity. Because the customer must accrete the discount, what are the tax consequences at maturity? What are the tax consequences at maturity?
So for this one, since they held um okay, so muni bond in the secondary market. So this wouldn't be an OID, but I
No, right on. I like what you're doing. Great test taking skill. You're just kind of looking at the question. I call this RTFQ, read the full question. You're saying, okay, let me make sure it's not an OID. It's not, right? Because it would have said that if it was. So it's not an OID.
so if they held it, let's see. I
Yeah,
mean,
you're on the right track. I think you're going to get this right. Let's see. I think you're going to get it.
I think it's A.
You were correct, right? Because you've been doing it a long way.
Yeah,
Excellent.
yeah, exactly. Yeah,
Excellent. Excellent. That was a tough one, by the way. I mean, a tough one because you have to kind of think it through. Oh, it's very easy to,
yeah,
say, okay, I got to do the 840 to 1,000, 160 divide by. No, you've been doing that already, right? So you're done. You're done. Which of the following would be considered when analyzing the credit worthiness of a revenue bond? Now, I would tell you that a big part of the questions on muni bonds
mhm,
are distinguishing between GOs and revenue bonds.
yeah.
I would recommend that at some point you take a sheet of paper and fold it in half. And on one side, write all the terms associated with GO bonds.
Okay,
And on the other, all the terms associated with revenue bonds. That's going to be a big part of what you're going to be able to have to do on the test.
okay.
Okay, so which of the following would be considered analyzing creditworthiness of a revenue bond?
Yeah, I'm gonna go with two and three.
Excellent, man, Nico. Your performance in this coaching call has been outstanding.
Thank you.
When is your test date? I'm hoping it's like tomorrow, based on your performance.
Really, it's like the last week of January.
Okay, well, like I say, I'm ending the recording here. If you would like to join us and win a coaching call like Nico, just join us every Tuesday, 5 p.m. Las Vegas time, baby. And you too can enter the drawing and then claim your 30-minute coaching call. I'll stop our recording.